Tesla's Model Y is back at number 1 in Europe, but Tesla stock did not simply move higher, and that tells us the real story. Investors are no longer asking only, can Tesla sell more cars? They are asking, can Tesla grow, protect margins, and fund AI, autonomy, robotics, and future products without hurting cash flow? That is the key point today. Hi everyone, welcome back to Life in the Future. I'm Ken. Today, I want to connect several Tesla updates into one bigger picture. Model Y demand in Europe is recovering. Giga Berlin may be preparing for higher production. Tesla is improving supercharger prediction with machine learning. Tesla Semi is entering real-world freight testing. But investors are also watching capital spending, regulatory credits, price competition, and margins. So this is not just a news update. This is about what really matters for long-term TSLA investors. Let's start with Model Y. In March 2026, Tesla Model Y returned to number 1 in Europe. Registrations reached 33,723 units, up 117% year over year. That is a strong rebound, especially because January and February were weak. In January, Model Y ranked 42nd. In February, it improved to 14th. Then in March, it jumped back to number 1. So the idea that Tesla demand in Europe is completely collapsing now looks too simple. This does not mean Tesla is fully back to unstoppable growth, but it does show that European demand is not dead. For investors, that matters. Next is Giga Berlin. Tesla is reportedly planning to hire around 1,000 new workers there. That would bring the workforce to around 11,700 people. And from Q3 2026, Tesla is reportedly planning to increase weekly production by around 20%. This timing is important. Model Y sales recover in Europe. Then Tesla prepares to increase production in Europe. That suggests Tesla still sees demand opportunity, but more production is not automatically good. The key question is price. If Tesla sells more cars by cutting prices too much, margins may suffer. But if Tesla can grow volume while protecting pricing power, that is a stronger signal. So this is good news, but investors still need to watch margins. Now let's talk about the stock. After Q1 earnings, Tesla stock initially moved higher, but then struggled. The earnings were not simply terrible. Some numbers were better than expected, but investors focused on capital spending. Tesla is entering a very expensive phase. AI, robotics, chips, factory upgrades, autonomy, and future products all require huge investment. The number being discussed is more than $25 billion. That spending may be necessary, but the market wants to know how much pressure it will put on free cash flow. This is the main tension. Tesla's future may come from AI, Robotaxi, Optimus, Semi, energy, and software, but those opportunities require heavy investment before they produce major profits. So investors are not saying Tesla has no future. They are asking how expensive that future will be. This is why Tesla is difficult to analyze. Business momentum looks better. Model Y is back in Europe. Giga Berlin may increase production, but the financial side is still under pressure. Margins, cash flow, capex, and earnings quality are now very important. Tesla is not just a car company, but it is not yet fully an AI cash flow machine either. It is in the transition phase, and that transition can be volatile. Next, regulatory credits. Tesla has historically earned money by selling regulatory credits to other automakers. This revenue is high margin, so it has helped profitability. But if regulatory credit income declines, Tesla's core business becomes more important. That means vehicle margins, software, services, energy, FSD, and eventually autonomy revenue need to carry more weight. For long-term investors, the question is simple. Can Tesla become highly profitable without relying on regulatory credits? Because if credit revenue weakens while price competition and capex rise, the pressure becomes more visible. Now let's look at a practical owner update. Tesla is improving supercharger congestion prediction with a new machine learning model. The system uses real-time traffic data near superchargers to better predict which cars are actually going there to charge. This matters because many superchargers are near malls, restaurants, and busy roads. Not every Tesla nearby is going to charge. Tesla reportedly trained the model using 9 million miles of anonymized and aggregated driving data. The goal is better waiting line estimates. This may not move the stock tomorrow, but it improves the ownership experience. And from an investor view, it shows Tesla's ecosystem advantage. Vehicles, software, data, charging infrastructure, and user behavior all work together. That feedback loop is hard for competitors to copy. Next is Tesla Semi. Allo Logistics has started a 3-week real-world freight pilot using Tesla Semi in California. This matters because commercial trucking is all about numbers. Fleet operators care about range, charging time, payload, maintenance cost, uptime, reliability, and total cost of ownership. They do not buy trucks because of hype. They buy trucks when the economics work. So this pilot is important. The real test for Tesla Semi is not the announcement. It is whether logistics companies can say, this works and it saves money. Finally, competition. The 2026 Kia EV6 reportedly received a $5,000 price cut in the United States. That reminds us that the EV price war is still alive. Yes, Model Y recovered in Europe. That is positive. But competitors are still cutting prices. So Tesla cannot only chase volume. The next phase of the EV market is about profitable volume. How many cars Tesla sells matters, but how much profit Tesla keeps matters just as much. So let's bring everything together. Today's Tesla story is not simply bullish or bearish, it is balanced. On the positive side, Model Y is recovering in Europe. Giga Berlin hiring suggests Tesla still sees growth potential. Supercharger AI improves the owner experience, and Tesla Semi could support future commercial growth. But on the cautious side, investors are watching capex, free cash flow, regulatory credit risk, competition, and margins. For me, Tesla should be viewed through 4 points: volume, margin, capital spending, and long-term optionality. Volume is improving. Margin is still the question. Capital spending is the near-term pressure. And long-term optionality is why investors still care about Tesla's future. From a long-term investor's perspective, I would not call this a simple Tesla is back moment. I would call it an execution test. Tesla still has the brand, demand, charging network, data advantage, and major opportunities in AI, autonomy, robotics, energy, and commercial vehicles. But now Tesla has to prove it can turn those advantages into durable earnings. Can Tesla grow volume without hurting margins? Can it invest heavily without weakening free cash flow too much? Can software, FSD, energy, semi, and AI support the valuation more clearly? That is the real story for TSLA investors. So my view is balanced. Do not ignore the risks, but do not ignore the long-term structure Tesla is building. If Tesla executes well, today's spending may become tomorrow's competitive advantage. And that is why Tesla remains one of the most important companies to watch in transportation, energy, and AI. That's all for today's video. If you found this analysis helpful, please hit the like button. And if you want to follow Tesla, TSLA stock, AI, autonomy, and the future of technology from a long-term investor's perspective, make sure to subscribe to Life in the Future. Thank you so much for watching, and I'll see you in the next one. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.